Daily new COVID-19 infections in Malaysia surged to 4,498 today from 3,551 yesterday. The figure is the country's fifth highest number reported in a single day and also the highest in over 3 months, with the previous spike being 4,571 cases on February 4th. The highest ever tally of daily new COVID-19 cases was 5,728, reported on January 30th this year. Health Director General Tan Sri Dr. Nur Hisham Abdullah said the latest figure raised cumulative infections in Malaysia to 432,425, with the highest number of cases coming from Selangor at 1,424. This was followed by Sarawak with 750 and Kuala Lumpur 436. 34,789 individuals are still infected, with 372 in the ICU. 22 new fatalities were recorded, taking the death toll to 1,632. The ministry also detected 19 more COVID-19 clusters, of which 10 are linked to workplaces. In a separate development, Flight Attendants Union NUFAM is urging the government to immediately vaccinate airline workers before dispatching flights to India. In a statement today, the organisation said thousands of airline workers are yet to be vaccinated, especially the cabin crew and pilots. It also called on Khairi Jamaluddin, the minister coordinating the COVID-19 immunisation program, to give his assurance that none of the flight crew should fly to India before they are vaccinated. Putrajaya intends to bring home Malaysians stranded in the northern and western region of India. The country reported its highest ever single-day spike with 414,188 new COVID-19 infections today. That brings its tally to a whopping 2.15 million. There were 3,915 fatalities, taking the death count to 234,083. MIDF research says Supermax Corp is shelving its plan for dual listing on the Singapore Exchange due to current circumstances. The research house said that at a recent post-results briefing, Supermax indicated that the idea of using its treasury shares for a secondary listing is not feasible at the moment. MIDF research believes the company could instead use the treasury shares to be paid out as dividends to shareholders. That said, it also anticipates a combination of cash dividends due to the glove maker's healthy cash flow and strong cash pile of 3.7 billion ringgit as of end March. In a note today, MIDF research said Supermax also noted that average selling prices had moderated by 15% to 25% from its peak, while spot prices were also noticeably lower. It said the softer pricing can be attributed to additional capacity in the market, which led to higher supply and softer nitrile rubber prices. However, it said Supermax expects average selling prices in the next 2 quarters to remain strong. Supermax is also said to be preparing itself to continue to thrive after the COVID-19 pandemic, with plans for production capacity expansion of 22.2 billion pieces of gloves in the next 2 years, from Plant 13 to Plant 17 here. In addition, the company is working closely with government agencies abroad to establish glove and face mask production facilities in countries it operates. MIDF reiterated its buy call on Supermax with a target price of 6.73 ringgit, a potential 36% upside from the counter's closing price of 4.96 ringgit today. SP Setia is selling 8 parcels of plantation land in Johor to Scientex for 518.1 million ringgit. SP Setia said in a bourse filing, its subsidiary Pelangi had inked a conditional sale and purchase agreement with Scientex's subsidiary Scientex Qatari for the disposal. The tracts are freehold and measure about 960 acres. Located in Tebrau, Johor Bahru, the land is registered for agricultural use and is home to matured oil palm trees. SP Setia President and CEO Datuk Kor Chap Jan said the transaction is part of the group's business strategy to improve efficiency by monetizing some of the land bank to be ploughed back into its other project developments for immediate launches, as well as paring down debt or other use deemed fit. He said it is expected to contribute positively to SB Setia's profits for the next few years. Meanwhile, Syarikat said the proposed acquisition represents a strategic investment opportunity to increase and boost its existing land bank. The plots in question are close to its existing developments. The expansion is in line with the goal of Syarikat to build more affordable homes with an objective of completing 50,000 affordable homes by 2028. The deal will be funded by internally generated funds and bank borrowings and should be completed in the first half of 2024. SB Setia's share price gained 2.9% to close at RM1.06, while Syarikat went up 0.49% to RM4.13. Berjaya Food, the franchisee of Starbucks coffee in Malaysia and Brunei, is set to be aiming for another 8 Starbucks outlets in the fourth quarter of FY21 under the Food and Beverage Group's planned expansion. This is according to RHB Investment Bank analysts, citing the management of Berjaya Food. The analysts wrote in a note today that from what they gathered, the focus on Starbucks' expansion will be on drive-through outlets, which have been its best performing segment since the start of the MCO last year. Berjaya Food operates a total of 329 Starbucks cafes and 50 over are drive-through outlets. RHB's note follows Berjaya Food's announcement yesterday on its latest financial performance. Third quarter FY21 earnings came in at RM11.61 million against a net loss of RM1.39 million a year earlier, while its 9-month net profit was higher at RM33.1 million from RM11.24 million previously. According to the RHB analysts, the 9-month earnings were above expectations at 110% of its full-year forecast and 93% of the street's estimates. In FY22, they said earnings growth should be underpinned by its expansion plan, as well as the broad reopening of the economy, which should see Berjaya Food being a prime beneficiary of a steady return in footfall. RHB raised its earnings forecasts for Berjaya Food by 30% for FY21, 26% for FY22 and 15% for FY23. It kept its buy call and raised its target price for the stock to RM2.33 a piece from RM1.77. Berjaya Food closed 0.5% lower today at RM1.93. Mitsui & Co. reportedly plans to accelerate its expansion into healthcare and nutrition via IHH Healthcare. Quoting the Japanese trading house's CEO Kenichi Hori, Reuters said that what Mitsui is targeting in the two areas in the long term is quite large, and that Mitsui will use IHH and other assets to achieve that aim. According to the Newswire, Kenichi said this during an analyst call today without addressing a report by Bloomberg yesterday that Mitsui plans to take IHH private. The media were permitted to listen in but not allowed to ask questions. Mitsui owns a 32.9% stake in the Malaysian health group worth around $12 billion or about 49 billion ringgit. Bloomberg had reported that Mitsui was approached by private equity firms on the potential share buyout of IHH. The discussions are in the early stages and there is no certainty that Mitsui will proceed with an offer, the report said, citing people with knowledge of the matter. IHH ended trading today 0.9% higher at RM5.66.